Good Thursday morning, everyone. Hey, Rick Hoffman here, your host with LMA Trading and our pre-market prep here, preparing for what might be for an interesting day, but kind of a slow day, I think it might be. So we've got our coffee here, and good old Chairman Kapow. He's going to be holding a virtual event starting today in Jackson Hole, which is their annual meeting. And so I think the markets are just going to kind of lay back. Might be a little bit of a down day, maybe a little bit of rotation going on between, the tech stocks and value stocks, things like that. The 10-year bond has popped up a little bit, hanging around the 1.35 area. And so if that moves up, we're going to probably see tech stocks drop, things like that. But hey, let's go ahead and get in here to today's information here. But before we do, just a little bit of housekeeping. I'm not a financial advisor and I do not give financial advice. Do not have any trade rooms, don't set out trade alerts. These videos are part of my trade journey. I am an older trader, 60 plus, and so rather risk adverse. I look for high probability setups. I typically play credit spreads and put on some debit spreads from time to time. I do buy, puts, and I do buy calls from time to time on, high probability setups. And I'm typically in those for a very short period of time. This is just part of my education as my trade journal. And I will jump into my journal for yesterday and kind of talk a little bit about, how things wrapped up yesterday. But then what we kind of see here today. But I invest my own money and I realize stocks and options both have risk, and neither stocks or options may be suitable for every investor, and you can lose every penny of your money if it's in the market. So just be prepared for that, and you should be picking your own entries and also your own exits. Maintain your own risk and risk parameters. And in this market right now, with everything being extended, it's still an extremely bullish market, but you should be sizing it accordingly because, we could get a, nice little 1 to 2% pullback pretty quick in a market like this. Some fear jump in, somebody says something, something comes out of the Jackson Hole event here today, tomorrow, something like that. And next thing you know, you got a bunch of fear in the market and things just take off the other way. But anyhow, so here's what we're looking at here right now. The Qs are down. They were down a little bit more this morning, but the bulls are pushing the price back up here this morning. So we're just down about 12, a little more than 12 points. The YM, which is the Dow, it is green by about 31. So it was, I think, a high. The high on this candle was 35,402. So that's where the high is, but we've kind of broken above this trend line. So we closed right at or just above the trend line yesterday. So we'll see if it can continue this path here. The Russell, we are in this zone here. We hit the 1 ATR, which I kind of thought we might get there. Wasn't quite sure, but we bounced back. We are a little bit red, but again, the Russell is setting up really nicely here. If we start seeing a big rotation and possibly out of the tech stocks, if interest rates start to pop, this could benefit the Russell possibly in the small caps. So, we're not going to be shorting. I want to short the Russell, but we're not there yet. I think we're a little bit high, so I'm not ready to play long on this either, because we've had a pretty decent little move. So it needs to probably pull back or cool off and trade sideways. So we may see a little bit of that here. And but if we get a continuation here on the Russell and it goes above our price level of 2260, then that's going to probably make prices are going to go higher. The S&P We have the VIX popped here at the close of yesterday, and then in after hours in the futures. Now it's pulling back here this morning, so we're seeing that reflect in the S&P, in the Nasdaq probably, and so those things are just kind of uh, making themselves known here. We did have a daily squeeze in the S&P, so it's currently firing, but just not getting a whole lot of momentum the last few days. We've been setting new highs, but that's about it. We did break the 4,500, which is a key psychological level, but we didn't quite hold it. We came down close just below it, a couple points below it, but that's you know that's going to be really really key to where we go from here. And so if we can get above that here and close above the 4,500, I think we're going to probably see 45.6, 45.7, but that's a key level. And typically, we may I think there's more room to run here on the S&Ps. Let's jump over to our chart, or our weekly, and and look at that a little more closely here. And I think September, October history. We look at the weekly chart. We can see September, October right in this general area here. So we've got pullbacks here, and that it just history. What's the saying they say? History doesn't necessarily repeat, but it does rhyme. So um, so we're extremely bullish. I mean, there's nothing really bearish about these charts. Nothing that I see on the horizon, nothing that I'm seeing here indicates any type of reversal in this bear market or bull market. And so the Bollinger Bands are flaring open here, so which may give allow the S&Ps to run a little bit more, and so we'll just kind of see what they deal out with us. Let me pull up my yesterday. This was the market open yesterday. So I welcome a little bit of a pullback, is what I said. The Russell is setting up for a play to the downside, just waiting on a signal. And and like I indicated here today, we are a little bit red, so I don't see that as a signal. That would be a little premature, but we'll be watching that very very closely to see what may happen there. We did add a position here. We added a vertical debit spread, a call debit on uh, on Amazon. So let me pull this up on my chart here, so get a little bit better look at that. Let's see, Amazon, where are you? Yes. So Amazon's, it looks to be pulling back just a hair here this morning, but we got into it right here a little bit on the high, but probably a little early on this. But we were getting a strong signal on the ready aim fire. When we go back and we look, when we've had these other signals, we've had a pretty significant little pop here, but we have this huge gap from around 35.75 down to 33.89 or 33.90. So looking for this to fill the gap. So we took out October 15th call debit spread on this here. So it's a low risk trade with more than, it's like about almost a 5-to-1 risk reward. So we'll be looking at taking profits somewhere's up here in this zone here. So that would give us about a 3-to-1 possibly a risk reward, and that's what we're kind of looking for here. I think Amazon has it's showing some strength and a little bit of momentum picking up. So we'll see if we get any continuation and close and get above this key level 3,300. If we can break this level here of resistance at 33.63, roughly 36.64, and we hold, then the next line of resistance is going to be right at the 50, and the 50 may meet up right here with us. So that's going to provide a pretty key level of resistance. We'll see if we get through that, and from there, it should be really close to blue sky to fill the gap, and stocks want to fill the gap, so we're looking to capitalize on that. Then of course, we added a Tesla position. We took a credit spread on Tesla. I like the way Tesla was setting up. Tesla looks to be probably going to be down a little bit here today, but we took the 660s right here on this trend line. So we took the 660 credit and sold that strike, and so we're looking at that to hold above that. And I think Tesla's setting up for a run. We were looking at possible call debit spread on it, but I just felt like this is a better setup. So, going into September, so to capitalize on a little bit of a gain, and then we'll see. If we break this key level here. Then I might like 730, then looking for 750 to 800 possibly out of that. Then we'll definitely look at a debit spread. I think that might be pretty decent, because we got a trigger here on the daily chart on the ready aim fire, but it's a mid-level fire. So we didn't get the aim, we just have the ready, so it hasn't really indicated that. So that's kind of why we went with a credit spread. And let's see what else we have here. And we have positions on Facebook right now. That's playing out very well. It is in a daily squeeze, and we sold the strike here. So looking pretty solid on that. We also have spreads on the SPX. We picked up another spread for next Wednesday, the first. I believe is the first. Yeah. And so, we've got spreads closing out tomorrow, which is we are in great shape on that spread. And so that's looking real well. And then we have one on Monday. I mean, the S&P would have to drop well over 100 points to take out our spread for tomorrow. Is it possible? Well, it has a range of 33. So on this one dip here, it was close to 40 points drop here, so we could get a couple big drop days, which would be 100 points. It would be it's a pretty substantial drop in the next 2 days if that was to happen. So we're looking at full max profit. I got sell orders on those to take out to keep the majority of the credit, but it may possibly fill if we get a pop on the S&P here today. So we'll see how that goes. So that's kind of how things are shaping up. That's how when I look at my my trade journal, this is kind of what we're seeing on our Tesla chart with pops up, and this kind of talks a little bit about our position, what we're doing on looking for a run to 735 to 750, and for it to hold the 660. We are considering longer credit spreads, possibly for January, holding. It's about a $4.45 credit. We'd be probably picking up 2 contracts on that, for basically the same value that we've got here. So so that would be the same thing. So giving this, if the 660 is a strong level of support, then it's an area that I don't think that Tesla will revisit anytime soon. So that is something that we're considering much longer term. Quick $800-900 profit if that holds all the way into that. And so then, we have the credit spread we put on yesterday was for next Wednesday was we picked up $1.50 credit on a pullback towards the close, and that is 40. So we sold the 44.55, and that's pretty much how things kind of wrapped up. Setting new highs, things like that, and now pushing into the markets that we're seeing here. So So let's see how things shape up, and we'll go. We'll kind of just sit on our hands. We'll watch these markets at the open. I am not doing anything, but possibly maybe closing out my Crocs position. It just isn't really moving a whole heck of a lot, and so we might. I just think that just might make sense to take the credit that I have locked in right now, and just depending on how this opens up here this morning, and it just isn't getting. It's coming into a squeeze, and we've got a mid-level fire here, but we pulled back a little bit yesterday. I don't know if we'll get some continuation and pop back up. So I'm possibly looking at this as a reversion to the mean. And when we look at this on a shorter term chart, on our 30-minute chart, we have cells. It's firing here, so price looks to be probably going down on that. So our 2-hour chart also, we've got uh, prices coming down, momentum's coming down. Everything's indicating that we're probably going lower on Crocs. So I just think maybe we'll eliminate that, because as of tomorrow we'll have 21 days left, and that's usually my rules are on my longer term. When I take 45, 50 days out on the monthlies, then we get to the 20, we'll hold the 21 days. And if we really haven't made much of a move, and we haven't been able to take our 50% profit target, then we're going to close the trade out and redeploy that capital in some other position. So that's what we're looking at right now. So you guys have a happy trading day. Happy Thursday to you. And we'll talk to you